Today, I'm going to share with you a secret way to avoid false breakouts. Now, you can see SOFI right here had an enormous breakout back, when was this? June of 2025. Huge moves up, right? And that's the kind of breakout you're looking for. But, you know, several times over, it really struggled to get through this area. And you might have got caught maybe right here on this candle with this false breakout right before it fell about 30%. I don't want that to happen to you. So let's watch this video together. How to avoid false breakouts, my secret technique. And of course, you know what's happening today. We're going to be playing Big Money Bingo. Let's watch this together and win some prizes. How's that sound? Let's go.
Strategies. Setting a support line, then a resistance line, and waiting for that one moment to happen when the price suddenly breaks through. And when it breaks through, it really breaks through.
All right, I definitely am going to give you breakout because we got that. All right, of course, as we go through, if you see anything on the bingo board, put the coordinates. That way I don't miss it.
But how do you trade this strategy successfully? Is there even a strategy? Are there any secrets? Well, yes, there's a couple. And lucky for you, I'm about to share them in this video. Let's not waste any time. Let's get straight to it. Has this ever happened to you? You set your support line, you set your resistance line, and wait for a breakout to happen. Once you see that the price suddenly breaks through your resistance, you enter a trade extremely excited because you're prepared for a huge jump in price.
There's some really great trading psychology lessons right there. First, putting support and resistance lines on the chart can be useful if they are meaningful, right? So let's look at SOFI. Let's look at SOFI. And what I want to show you is, oh geez, I don't even know where that was supposed to go. What I want to show you is right here, this area right here on SOFI. So I was the one guy screaming, don't buy SOFI here in January 2025. Receipts are on YouTube. Receipts are on YouTube. Don't buy SOFI right here. And it crashed 50 something percent. I think it was 53% from top to bottom right here. Yeah, 53% top to bottom. That exact area was absolutely an area of overhead resistance. Okay, overhead resistance. These buyers, all the way back in 2021, were trapped. And the very first time they could get out at break even, what happened? They took it and they dumped it. They dumped it hard. And think about the psychology of it, right? If you finally got to break even after 4 years of struggling to get out, how fast are you going to sell that stock? As fast as you possibly can. Now, you can get your chart to look exactly the same as mine over in our Discord. All you got to do is go to the FAQ and member contribution section and give it 2 seconds to load. FAQ member contribution section, go to trading view. You can get the DeepThought indicator, which is exactly what I'm using right here to show the order blocks as well as the moving averages. 100% free for Outlier customers, and it will work with a 100% free trading view account as well. So definitely want to pick that up. Now, where I was going with that is just because you've drawn lines on the chart, they don't mean anything. Just because you have drawn a line here and you have drawn a line here does not mean the market cares. The market doesn't give two monkey donkeys where you draw your lines. Just for example, as if you said, okay, my price target's right here. The market does not give two monkey donkeys that your price target is anywhere. Now, support and resistance using outlier blocks, easy to see, super easy to see. There's no, what am I trying to say? Nothing subjective about it. They are there and they work, right? Just because you draw the lines there doesn't mean that's going to do anything. So keep that in mind as we go through, right? Don't be subjective. Use the data at your fingertips.
You get your popcorn, sit down, stare at your monitor, but then suddenly the price reverses and dips. You
okay, and hang on.
Sit down, stare at your monitor, but then
wait, I'm trying to pause at the right spot.
Suddenly the price reverses and dips.
Okay, there we go. There we go. This, my friends, is why this slide exists. Not that slide. Why would you go to that slide? I literally had the right slide that I wanted up and it went to the wrong slide. No, not that. No. Sorry. Professional YouTuber at work over here. That's why the slide that now I can't find. This slide exists, right? You buy here looking for the breakout. And you know that you need to sell when it turns around because you are a smart investor. You have a trading plan and you know, hey, you know what? Sometimes it doesn't work out and I need to get the heck out of Dodge, right? But you're afraid to sell because A, if you sell, that means you have to admit that you were wrong, which is tough. And B, you cut off any possibility of it recovering, which is also tough. But if you don't take the trade off, you can, and doesn't always happen, but you can get stuck in this situation, right? Because the market just invalidated your thesis right here. And that's okay. There's nothing wrong with that, right? I have another slide. Hold tight. There's nothing wrong with that. There's no shame. Come on. Now it's not even zoomed right. There's no shame in losing money onto a stock trade. Not at all. But to hold on to a loss and let it get bigger and bigger, or even worse, to buy more is amateurish and self-destructive. Now, both of those slides come from Mark Minervini, one of my direct mentors, who will be here on February 19th. And you can ask as many questions as you want of Mark, which I'm super excited about. 2-time U.S. Investing Championship winner. And I'm also competing in the U.S. Investing Championship this year. My trading plan is linked down below, and you can have it for free. Just go for it. Just click the link. So yeah, this is totally normal, right? Don't think that that it always happens to you. It doesn't happen to anybody else, blah, 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 right? There is nothing wrong with being on the wrong side of this trade. But Chris, what do you mean there's nothing wrong? I don't want to lose. Losing is an unavoidable consequence of trading. Just like winning is an unavoidable consequence of trading. Embrace it. It's part of the game.
Tips. You stare at your screen confused on what just happened and your portfolio just tanked. Well, I'm going to teach you a secret so this never happens to you again. So the first question we need to ask ourselves is, what is a breakout? Well, a breakout is when you have a support and resistance where there are multiple key rejections for both. The actual breakout happens when the price bursts through one of those key levels. And notice what happens. When the price does break through, it starts soaring, making this point right here a great entry point. But
now remember, he's obviously cherry picking for this video. And because that happens, right? Because this does happen, that doesn't mean every time it will happen. It's like trend trading, right? We can see using the outlier trend template when the direction is moving one direction or another. But we can't see magnitude and we can't see duration. This, we can't see magnitude nor duration, no matter what, right? Even this pattern repeats 1,000 times. Magnitude and duration are still up in the air. Nobody knows that. Follow the trend. I'll definitely give you follow the trend. Wait, G1, not B1. Use the stop loss. Okay, got it. And then G4 entry exit signals. I got that too. All right, let's keep going.
But the question is, how do we find setups like this, where the market could potentially have a breakout? The answer is breakout patterns. I'm sure you've all seen these before, but there are multiple.
Now, again, keep in mind, a lot of people like to look for these patterns, but they're so subjective. So subjective. They never follow the exact same template right here, right? And for example, right, this is a downtrend. Let's make this bigger for austerity's sake. This is a downtrend. Just because it closes above whatever arbitrary line you drew does not mean that it's going to continue up forever. And this is an uptrend. Just because it broke down through that line doesn't mean it's going to go down forever, right? These are so subjective. I cannot stand subjectivity in trading. Use the data, use the math, use the moving averages, which are just price and time, which is all math-based.
Key breakout pattern.
Exactly. Yeah. DeepThought's got it right there. It's the upside down funnel cheesecake triangle wedge pattern. It's a classic.
You should have in the back of your head when trading. There's the flag, wedge, pennant, triangle, and rectangle.
Just the other day, hang on.
When trading, there's the flag, wedge, pennant, triangle, and rectangle.
Okay, so just the other day, we watched a video, and the person loves his technical analysis, and he was talking about the 10-year treasury and about how it had hammer, and then, I mean, literally, like, the receipts are on YouTube. I forget what he said. He said breakout, hammer, and then moving up for a bull flag pennant or something like that. I don't know because I don't care. And then my exact thought was, oh, you mean an uptrend? You could learn all this baloney. You could learn all this malarkey. You could learn all these different things, but none of this matters. Is it an uptrend or downtrend? I can show you the direction of the trend all day, every day, and you can see it within 1.2 seconds. versus, oh, this looks like a flag forming, and oh no, I really can't stand this. I don't even know how to draw these. How do I draw these? Oh, wait. I can do that with this tool, right? Highlighter. Yeah, I can do that. Oh. Here we go. Yes. So that means it's a flag. It's a flag. Y'all, get ready. Okay, we're about to flag the flag out of this thing right here. Okay. So the only thing that's going to happen in this flag is once it breaks out to the upside, once it goes up here, gangbusters, millions and millions of dollars are about to be had. Or you can just say, oh, it's in an uptrend.
Angle. Now, the problem I see a lot of people doing is they are looking for the exact price action that is in the pattern image. The price will rarely mimic the exact pattern, if ever. So you're not exactly looking for the exact price action that happens in the image, you're looking for the key support and resistance levels that make that pattern. Now, to be honest, it doesn't matter which pattern you get. Hell, you don't even have to memorize the names of the patterns. The key thing you have to take away from this is that all these patterns have something in common. The price consolidates, making two key levels, then eventually breaks out. So here we found price movement that looks as if it has multiple key points of support and resistance. The more key points, the better. We acknowledge this is happening, so we put it.
Do you think that's an uptrend or downtrend? Tell me in the chat. Does this look like we're already trending up or already trending down? I don't know if he's going to say a breakout to the upside or breakout to the downside, right? Because, oh, he already moved on from that. Because like, I don't know where it's going. You don't know where it's going, but I can tell you one thing, the moving averages would, because mathematically price is moving up. So therefore your moving averages are most likely also moving up. And because they are moving up, that would show an uptrend.
The support and resistance line making a flag pattern.
Okay, here we go. But if it's in an uptrend and it comes below that line right there, then of course it's going to zero. Right? Even though it's got the higher highs, I want to help y'all fill this in. Even though it's got the higher highs right here, even though you're following the trend, tell you what, one itty bitty baby red candle right there, it's game over. You definitely are predicting right here. Definitely predicting.
Pattern. So far, so good. But this is the point where people usually make the mistake. So what happens is people usually wait for a breakout in either direction.
There we go, baby. Moon.
So once someone sees the price break through their resistance line, they immediately enter the trade right here. But it turns out it was a false breakout.
Oh, goodness. Oh, come on. If only I had seen that red candle, right? I told you, as soon as we get the red candle to the downside, it always goes down. Yep. How many times does this happen, right? We're in an uptrend, and then immediately the price goes down 1,000%. Very huge.
And the price reverses in the opposite direction. This specific trader would have lost a pretty decent amount of money. I'm going to show you how to prevent this from happening, so we go in with a greater...
Remember guys, you can prevent this from happening. Definitely the wrong phrase right there. There's nothing you can do to prevent the market. Nothing you can do to prevent the market whatsoever. The market's going to do what the market's going to do, right? And of course, uptrends can turn into downtrends, right? You can't predict. There's no possible way to predict what's going to happen, right? No possible way.
Chance of the price going the direction we want it to. The first thing we need to understand is what's called momentum candles.
Oh, okay. Finally, we got the momentum. I know you guys have been geeking on that one for a while.
Momentum candles can have many forms, but usually it's one big candle with a large body, or three medium-sized candles all going in the same direction. These two forms of momentum candles are going to be what we are looking for. Let me show you an example. So in this example,
okay, I like where you're going there.
We have a set of multiple higher highs, so we set a resistance level right here. Then we have a key support level here because the price reversed multiple times at this level. And now we wait. We see a pretty decent sized candle form, and then it breaks the resistance level.
Now, according to the exact same thing that he showed a minute ago, that instantly means it's going to crash back down, right?
This matches our definition for a momentum candle. The problem is only the tip of it broke out, so we are not counting this as a momentum candle.
I'm not going to say it, but I know you were thinking it.
For us to be able to count this as a momentum candle, the majority of the body would have had to been crossing the resistance level. We would also consider this a momentum candle if another green candle appears outside of the line like this. But unfortunately, it was a red candle instead, so we ignored the
So it's going to zero. So it's going to zero.
signal. Let me show you another example. So here we have our support and resistance level set up. The price moves and a decent sized candle breaks through our resistance. It's not a momentum
Doesn't count if I mean, I didn't say it. You said it. I didn't say it. But Rick was right. Rick is right. So is Martin over here.
candle because it does not have a big body. So we wait for further confirmation.
I wonder which direction this is going to go with it plotted at the bottom of the screen.
A second candle appears, but it's still a pretty small candle. And as we said before, we will only count it as a momentum candle if it has a huge body or there are 3 green candles. So we wait again. Then a third green candle pops up, which is in
Oh my goodness gravy. A third green candle. When we've been trading sideways to down, it looks like. Mathematically speaking, this would have been a turning point inside of that trend. Okay, cool.
extremely bullish sign. So this is where we enter the trade. Now, there are 3 different scenarios that could happen. The price keeps going up from here, the price goes back down to the resistance level and bounces off, or the price breaks through the resistance level and falls back down and counts this.
That's right. Any of these things can happen. It goes up, it goes down, or it doesn't go anywhere. Genius.
As a false breakout. So what should we do? Should we wait for a pullback to happen, or should we enter the trade right now? Well,
Chris Chains would have bought it all the way back here. No. Chris Chains would have bought it on that candle right there. I don't know why he's not teaching you guys to buy at the bottom. I'm just saying.
what I like to do is set up a strategy, so the odds are always in my favor no matter what the outcome is. Rather than wait.
Do you though? Because I feel like this is the kind of video that's just made for like engagement bait, right? Granted, I don't know anything about this guy. He has 1.91 million subscribers, so he's really good at YouTube. Now, this chart is based on who knows what. And of course, this chart was picked from probably a bazillion different examples of what he could have found to make sure that his point comes through, right? Because anytime that this happens, it always works this way. Always works this way.
Wait for a pullback, I'm going to enter the trade at the close of this momentum candle. Then I will set my stop loss right below the resistance level. This way, if the price does end up going down and doing a pullback and bouncing off the resistance level, it does not.
You know what's interesting about this? Nicholas Darvis figured out something kind of like this all the way back in the 1950s. In this book here called How I Made $2 Million in the Stock Market. What he would do is he would basically draw boxes, right? So imagine this is a price box, right? If the price breaks out through the top, he would buy it. If it broke back down into a box, he would sell it, right? Because he was buying strength, right? Remember, buy the rip because you don't know how high it can rip. You don't want to buy the dip because you don't know how far it can dip, right? That concept of buying something as it's going up is not new, right? And you don't need any upside down triangle cheesecake patterns to decide that, right? You just have to be able to get out when it invalidates your thesis. And there's nothing wrong with that. There's nothing wrong with that. But of course, he's showing you the way to avoid those secret technique false breakouts here.
Reach my stop loss and I still make profit. Or if the price decides to go straight up from here, I'm in the trade.
Okay. Feel like we said, I'll give you 03 for cut your losses. Yeah, and the boxes would align with the 10 going over the 20, right? I mean, I don't know what chart this is, so I can't find it for you. But the 10 was going over the 20, price was going over the 50 right here. Just a mathematical fact.
Considering this candle right here is a momentum candle, it's a very low chance that it'll be a false breakout. But in
very low chance. We can predict the future here. We understand that when you see a big green candle, the only thing that can happen is moonshots.
The off chance it were, I still have a stop loss in case the price decided to drop. Now that we have our entry point, we need to figure out an exit strategy. With breakouts, they tend to have large upside.
Bro, I mean, every time this happens, this happens, the only thing I should be doing is trading that from now on. The only thing.
So if we decided to do just a normal 1.5 ratio, we would be missing out on a ton of profit. To make sure we are taking advantage of the huge profits, we're going to be using what I like to call the two-step take profit system. This is how it works. First, you find your entry signal, then put the stop loss below the resistance line. Then we're going to set our take profit line at a 1.5 ratio.
Remember, if you aren't setting profit targets, you're not doing it right. You got to have your profit targets on there, right? You definitely don't want to let your winners run as far as they can out of control. You want to make sure that you tell those winners, hey now, Mr. Winner, don't you even think about continuing on up higher because that's my profit target. Therefore, you have to stop right there. This is a binary event. It will only go up, period, full stop, to this line. And so therefore, I shall get out.
Yeah. Once the price hits our take profit mark, we sell
Got to get out.
half of our shares to guarantee that part of the profit. The other half will stay in the game for more gains. Next.
Which, okay, I'm actually glad you talked about this. So just last week, I ran a really, I felt it was a comprehensive backtest. Talking about how if a trade is working, going like gangbusters. In fact, since I'm an actual trader, I actually had the results. So let's go to I forget what it's called. Hold tight. NEM, I think. Yeah, I think it was NEM. Yeah. So don't want to do that. When we were in this trade, it ran like gangbusters. And then silver crashed and it took this with it. Okay. I still ended up like 30-something% on this trade. Link down below is my exact, all of my trades that I've taken this year in the US Investing Championship. It's yours 100% free. There's no paywall or anything. Just click it. You got all the trades. So I remember, I think I was up about 30-something%. Anyway, point is, as it's running up like this, the idea that our CEO Mahesh said is, hey, why don't you start taking pieces off as it's running up? And in fact, I just quit talking about it and start showing it. So this is the link that you're going to see down below. And then I went to the 3 ATRs testing page. And so this is lots of trades that we had taken previously using the Plan M backtesting. And what I found was that the only time that taking profits off as it's running up, the only time that makes mathematical sense is a time like NEM had, where it went up 5 ATRs. So it went up like gangbusters, and then it crashed back down before we exited. Okay. That's the only time it made mathematical sense to do so. And let's talk about why. So let's say that you had a position size of 10 to start, and every ATR that it went up, you started peeling off your size, kind of like he's talking about here, selling half, selling 10%, whatever, right? When you do that, when your winners run, when you've got your biggest, mostest, baddest winners of all time, guess what you're trading? A smaller and smaller and smaller size. So as it's running up, you're getting smaller and smaller. Well, that makes sense, Chris. That's money in my pocket. The only mathematical sense that makes is if it actually crashes down, which was a once in a ever move in silver. The last time that silver crashed 30% in a single day was when Judas betrayed Jesus for 30 pieces of silver. That's the last time in the last 2,000 years that it went down 30% in a single day. Okay. So the one time where it happens to benefit you as a trader to sell a portion of your trade as it's going up happens once every 2,000 years. Okay. There was no other instance where it helped. So just putting that out there.
Next, we'll raise our stop loss to our previous take profit mark. Then our next take profit mark will be declared by an indicator. That indicator is the Chandelier indicator.
Oh, Chandelier indicators. Why hadn't I put that? I need to add Chandelier indicators on here. Now, I will give you reduced risk. Which is going to make our first bingo, baby. I'll definitely give you reduced risk, because that's what he's doing. He's taken off part of his position. Now, he doesn't understand the power of rolling positions, which is the greatest ninja hack of all time. But in this case, Yeah, I'll give you that one, right? There was a question I just saw, and when I let my winners run, more times than not, the uptrend reverses on me and turns a winning trade into a much lower profit or a loss. More times than not, Bill. You have the data to support that? Because I would bet it's not. I would bet it's not. I would bet, and Bill, this is not anything personal against you. This is called recency bias, right? Where, you know, something just happened. Oh man, I can't believe that thing happened to me. It always happens to me, right? If you actually have the trading record to back that up, then I would say maybe it's time to adjust your trading plan a little bit, right? Maybe, and you got to think about it two ways. Is there a flaw in the plan, which means I need to change the plan, or is it just rotten luck, right? If you can backtest and prove, and Bill, prove that it actually is a flaw in the plan, then you need to make a change of plan. If it was just coincidental, happen to happen every once in a while, you know what? Bad luck. It happens. But that's why I pulled the data. That's why I pulled this, and I wanted to prove, hey, the only time this makes sense was on this instance right here, where it went up 5 ATRs, but by the end of the trade, it was only up 0.87 ATRs, which is almost exactly what happened to us here. The only time. Now, a couple other instances, right? Let's say that it went up 6.5 ATRs, but it pulled back ever so slightly. So this is the up move in total. This is the actual ending trade result right here. Ending trade result 5.3. So it's still huge, right? So the max to final ATR was only one. So it pulled back 1 ATR before getting the closing signal. Here, I would have been down 18% comparatively by taking off one at 4 ATR, one at 5 ATR, one at 6 ATR. Yeah, I would have booked those profits. But you know what else I did? I sabotaged my overall net gain by 18%. So as I'm winning, as this is going huge, and we can't see the future. We can't see the future unless we get the Nancy Pelosi plan. Even a 1 ATR pullback here resulted in an 18% loss versus, well, I shouldn't say loss, 18% less profit. Right? Now look at this one here. This one went up 8 ATRs and then actually closed right under 6. So in that theory, we closed one at 4 ATR, 5, 6, 7, and 8, right? So cumulatively, we got all these together. We can see that was $754 in profits that we took off saying, hey, those are my monies. We ended up with a 24% less total gain. 24% less total gain. Isn't that crazy? Now, there's a question here. What is ATR? It's actually super easy. On your charts, there is an indicator called average true range. Just add that. In fact, let me go up here. Favorites, average true range. ATR measures the volatility of your stock. So I'm going to drop off for a second to show you. Right here, this is ATR. Okay, this is ATR. So the volatility spiked right here. You can see that. So the volatility, the average of the last 14 periods, whatever default is, was 5.34. When I put the trade on, the volatility was 3.73. So it went up nearly 50% in volatility between here and here. Okay. So that's what ATR is, and that's what we're calculating. We're calculating how much of the move, and ATR is going to be different from every stock, even almost every day.
To add this indicator, just go to Trading View, go to the Indicators tab, and type in
Fish strategy. He's trading stocks, so not a lot of choice. Well, then my friend, he needs to get to trading options. The capital leverage efficiency that you can get trading options is absolutely unmatched compared to stock. Like you couldn't get me to trade stock outright in our plan M, our most profitable plan, because of the ninja hacks. In fact, let me show you a great example. Main portfolio, and I think it was, which one was it? 38%, 43%. And it was NEM. Yeah. Got in on January 12th, got out on February 4th. So let me mark on here February 4th. 4th, right there. All right. So while I was in the trade, right, at one point it had gone up 17%. And of course, silver crashed, and I didn't get an exit signal until this date here. The stock went up 3%. I ended up, because of rolling, with a 43% gain. Now, receipts are on YouTube. You can actually see every single entry and every single exit to go along with this. So that is the power of rolling and the power of options, which is why you would never, ever, ever want to trade stock, because the efficiency, right? Not only that, but we can look at the leverage factor here. So I actually had 11 to 1, 11 to 1, meaning that for every $1 that I bought with options, I was basically buying $11 worth of stock. That was pretty cool, right?
And Chandelier stop. Then go to the indicator settings and change the ATR multiplier to 2. This indicator will give us our exit strategy. It's very simple. We sold
Okay, I'm curious about this ATR Chandelier.
half of our shares at the 1.5 profit mark. We let the other half run. We set our new stop loss at our
Hang on, let your winners run. Okay, so we got that.
old take profit mark, and we will exit the trade once the Chandelier indicator changes colors. So right here we would have sold the remaining of our position because
So it looks like a trailing stop using ATR. That's all it sounds like to me.
the Chandelier indicator changed colors. Notice all the extra profit we made by only selling half of our shares. If we would have sold all
Imagine all the extra profit you would have made had you had not sold half your shares, like literally double.
of our shares at the 1.5 profit mark, we would have missed out on a ton of upside. Let's see one more example. We find some key points that are great levels to make a support and resistance. Once we set our trend lines, we wait for a momentum candle to break through our resistance. One candle breaks the line, but it does not have a big enough body to be considered a momentum candle. So we wait for 2 more green candles. Once we see the 3rd green candle, we enter the trade. We then put our stop loss below the resistance line and set our take profit to a 1.5 ratio.
Now, I like looking for confirmation. I was looking for something over here for confirmation. I think we already have it. Yeah. I like looking for confirmation. So I don't mind that, right? But here's the thing, is that the way this is being taught, the way this is being explained, does not have any sort of consistency and discipline to it, right? It's, hey, look for this or that. And then if you find this, then you're going to be golden, right? It only goes up from here. So that's something I really wanted to stress, is that at Outlier, we're trying so hard to teach you consistency and discipline. In fact, Richard Dennis, one of the greatest traders ever, said, I always say I could publish the rules in a newspaper and nobody would follow them. The key is consistency and discipline. And look, I see you guys in Discord. Who are like, no, I'm going to do it this way this week. I'm going to do it that way next week. I'm going to do it this way the other week, right? You don't have a trading plan. Period, full stop. You don't have one, right? In fact, Larry Height, one of my mentors, he said, if you don't follow your trading plan to a T, meaning if you get your entry signals, you are obligated to take it. When you get your exit signals, you are obligated to take it. You never had a trading plan to begin with. If you're going to have a trading plan, you must follow it to a T, whatever that plan is. I don't care what that plan is. You come up with your own plan. That's what I encourage you to do. Come up with a plan, because once you come up with a plan, you will believe it more than anything else. Okay. Now at Outlier, we have our plans and I show them every single day. They're linked down below. So you could always have them no matter what, period, full stop. But if you don't have the consistency and discipline to follow them, you don't have a plan. And that's what most people do, is they don't have a plan. They'll watch a couple YouTube videos like this. They'll be like, oh, I'm going to trade like that from now on. And you can imagine how great their success is. Isn't selling half the same as rolling? Absolutely not. Not even close. When you roll, what's really cool about rolling is you're just moving from, let's say, strike A to strike B, right? When you do that, you're taking partial profits. You are freeing up capital that you can trade with anything else, and you're keeping the trade alive. So for example, let's say I started at the 80 delta. My trade was working like gangbusters, and now it's up to the 90 delta. When I roll back to the 80 delta, I am taking those partial profits, putting them back in my account. Or I could go trade with them if I want to. I've reduced risks. So let's say I bought it for $5 and I rolled it for $1. Now I only have $4 of risk in the trade. And I'm still back at the original deltas that I started with, right? So even though it went up to 90 deltas and I rolled it back to 80 deltas, I still have the same amount of deltas. Whereas if you sold half your shares of stock, you have half the deltas you had before. Big difference, huge difference here. And we've had this question brought up several times. We actually mathematically proved, at least in the last, in 2026, the trades in 2026, had I not rolled them down and just left them up there, I would have made 4 entire percent. But I reduced the risk by 80%. So yes, I am moving down on deltas, but by doing so, I've reduced my risk by over 80%. Receipts are on YouTube. Let's keep going. Great question though.
We then wait for the price to hit our take profit, then we sell half of our shares. After we sold half of our shares, we move our stop loss to our old take profit mark. Then we turn on the Chandelier indicator. We then wait to sell the other half of our shares until the Chandelier indicator turns colors. Once it does, we exit the trade.
People love the idea of sophisticated sounding indicators. Oh, the Chandelier indicator. Wow, I never heard anything like that. It looks like a trailing ATR stop, right? It's how far of a distance has it gone up relative in ATR terms, right? So there's nothing that you could have done to save this trade because of silver, right? Silver having an overall giant impact on this. In fact, let's just look at silver real quick. Yep. Totally could have seen that coming, right? Totally could have seen that coming had you used the Chandelier. In fact, let's turn that on. Chandelier? How do you spell Chandelier? Chandelier exit. Oh, it's new. All right. I don't know what I'm doing here. You said 3 ATRs. Okay, already got that. I don't know why there's 2 lines here. But obviously, you would have got out ahead of time. Obviously. Oh, wait, no, you wouldn't have. Oh, wait, no, you wouldn't have. Yeah, it makes no difference. Right.
Just showed you some secrets to make your breakout trading game that much better. All I ask in return is if you take...
So in a nutshell, right? In a nutshell, he's saying follow the trend. There are times when it will, quote, break out because of whatever pattern you want to assign to it, and it's going to run like gangbusters, right? I would prefer to never have to learn any patterns. I don't know any patterns. All I know is my itty bitty baby brain can only handle 3 moving averages, the 10, the 20, and the 50. Putting those together, it'll show you the direction of the trend, period, full stop, no matter what. It won't show you magnitude, right? It won't show you that it'll go up this much. It won't show you duration. It won't show you it'll last this long, because both of those are an impossibility because that's the future. But it absolutely will show you the direction. Well, at least it's following his plan, assuming that he had a plan, and he's not just coming up with the next YouTube video to talk about. But you know what? I want you to follow your plan and put hashtag outlier in the chat, because we just got a second bingo. So I want to make sure that you put hashtag outlier in the chat, because that's the only way that you can win. Oh, there we go. 2 bingos so far. Could we possibly go for a third? Could we possibly go? We got 1, we got 2. How close are we to a third? He didn't say anything about Brett, so we can't talk about that. He didn't talk about any moving averages. Definitely didn't talk about the market cycle. High probability setups over there. You know what? Yeah. When you get those patterns just right, let's go to these real quick. When you get these patterns just right, those are some super high probability setups, which would make a third bingo, baby. There we go. A third bingo, baby. That's right. So therefore, we got all kinds of winners who watch this live stream. All kinds of winners, but only the ones that are putting hashtag outlier in the chat, because you literally can't win unless you put hashtag outlier in chat. But only about half of you are doing so, which is fine. I mean, you do you if you don't want to win. Let me pull up the Wheel of Fortune real quick. The Wheel of Fortune, the merch Wheel of Fortune, and let's pick a winner. Let's pick a winner. Who's our first winner? By the way, for those of you who are winners, send us an email, support@outlier.com. April and Cheryl will verify that you are in fact Doug. And they will send out those prizes. All right, so our first winner is Doug. Duggan. So I heard that after he killed that turkey, he was dug in to the turkey. No, it's terrible. I know. I wonder what Doug won, though. Let's see what Doug won. Transparent pricing on Upwork. In case you guys needed some Upwork, there is some transparent pricing over there. You don't win any Upwork. Okay, I'm just saying. Nobody's going to win anything except what's on the wheel here. It's $10 merch credit. Now, listen, I know that doesn't sound like much, but we have everything in the merch shop price at the absolute lowest price possible. Why? Because we're not in the business of making money from merch, right? We're trying to get this in the hands of as many people as possible. So, for example, for a $10 merch credit, you could get a koozie, and you could get, I saw something on here that was like $7. What was it? There you go, a slingshot mug, right? And then use code outlier at checkout. That'll save you 10%. And everything on our merch shop, which will be linked below in all of our videos, is at the absolute lowest cost that the vendor would allow us to. It's cost plus 20%. Full transparency here, cost plus 20%. Use code Outlier at checkout. It's then cost plus 8%. We have hacked their mainframes and figured out we can do this to save you some money. And of course, our objective is not to, we were not in the business of selling merch, okay? We're in the business of giving away as much as possible, which is why we do it. Let's draw again. So again, for our winners, make sure you email in support@outlier.com. Who's the second winner of the day? Who's the second winner of the day? It's Vaclav. What's up, Vaclav? Congratulations. Vaclav is a rock star. Vaclav, what do you want? You can have anything in the store you want. I'm giving special preferential treatment to Vaclav. So sue me. Vaclav, what do you want, dude? Yeah, exactly. Vaclav has made some incredible bookmarklets to help us out with making trading as easy as possible. So I'm going to let Vaclav get anything he wants. He wants a monkey hammered backpack. You got it, dude. You got it. You got it. Let's go find that monkey hammered backpack real quick. By the way, the backpacks are fantastic. I use mine every single day at the gym. Let me go back to the collections. Where is that? Monkey hammer collection. And then the monkey hammer backpack. There you go. Does it have more colors? Oh, I guess it's just in gray. Okay. There you go. Monkey hammer backpack coming your way, Vaclav. Vaclav, my friend. Monkey hammered backpack. Well deserved, my friend. I'm super glad you won. Super, super glad you won. All right. Let's go for our third winner of the day. Who's going to be the third winner? Our third winner is... Who's it going to be? Who's it going to be? VR 3481. He's so stuck in the metaverse, but he managed to come out, put hashtag Outlier in the chat. So VR 3481. And let's see what if it's flexible hiring you want, Upwork is what you get. Man, I should be sponsored by Upwork. Let's see. Let's see what VR 3481 has won. A slingshot shirt, a big one. A slingshot shirt big. Congratulations to Vaclav, VR 3481, and Doug in 6914. Again, for our winners, be sure to email support@outlier.com. April or Cheryl will be back in touch with you to send you those prizes. And for everybody who's watching at home, thanks for coming. I really appreciate being part of your day. It actually is awesome that you've taken the time to choose anything in the wide world of sports. You chose to hang out with me. I really appreciate that. So listen, if you are ready to save time, make money, and start winning with less risk, click one of these two videos and have a fantastic day.